So we are live. Ankit sir, we can start.
Okay. Shall I start now?
Ji. Yes, we
Okay.
can.
Good afternoon, everyone. I'm C. Ankit Parak, the moderator of this webinar. We are delegated to welcome you all to this webinar, which is being organized by Continuing Professional Education Committee of ICAI. CP Committee has organized a series of webinars for the benefits of members at large from 6th of October to 17th October from 12 p.m. to 2 p.m. We request you to please block your calendar for the same. It is my pleasure to be a moderator for the 52nd webinar on the Tax Audit Clause 13 and 18 and Accounting Standard 9 from 12 p.m. to 2 p.m. In a short while, we will start this webinar. First, I would like to appraise you about the CP committee. The profession of chartered accountancy is growing leaps and bounds, and its phenomenal growth has brought the profession at the forefront. Today, our profession has acquired an indispensable position in business and economy. ICI continuously aims at developing knowledge edge so that the members stand out to the expectation of the society. To achieve the objective, the CPE committee of ICAI has been continuously striving for perfection, integrity, and knowledge, which make the word chartered accountancy synonymous with excellence in service. In this direction, the committee has always been proactive in the emerging needs of its members, enabling them to acquire contemporary knowledge and skills to face the challenges effectively by organizing CPE programs and providing adequate opportunities. This program for this evening as follows. We have two sessions of 1 hour each, and the topics are an overview of income tax audit and detailed discussion on clause 13 and 18, and the second topic is accounting standard 9. Our speaker will talk about the above mentioned emerging areas of the professional interest. Now, it is my distinct honor to welcome our esteemed chairman, C. Satish Kumar Gupta. Sir is presently serving as the chairman of the Continuing Professional Education Committee of the Institute of Chartered Accountants of India. In addition to this role, he is also the chairman of the Union Directorate and vice chairman of the committee for member in practice for the current term. He previously served as a council member of ICI from 2019 to 2022. He is a renowned speaker and author specializing in income tax assessment, searches, surveys, and professional development topics like goal setting and career planning. We are delegated to have him with us today. Now I request our chairman, sir, to say a few words.
Thank you, Ankit. My brother Ayush Shahani from Jammu, a very young and dynamic leader of the profession. CA Hitesh Maluji, I think he has not joined yet. Ankit Parak, moderator of the session. Ginni ji, secretary of the CP committee. Team CP, Team Tech, and my dear friends who are attending this webinar. A very hearty welcome to each one of you, and thank you from the core of my heart for attending all the webinars and all the programs of the CP committee. So friends, today is another webinar. We are coming up with Ayush and Hitesh covering AS9 and some provisions of the tax audit. And I think after their deliberation, there will be a short value addition to your knowledge about the tax audit and the AS9. Friends, just to brief you that it is in the series of webinar, it is 52nd webinar this year. And we are covering webinars, not only tax audit or audit standards on accounting. We are covering the opportunities in foreign countries. We are covering the opportunities in specific industry. We are covering the other tax laws and other laws where our members can be benefited by all these webinars. Friends, apart from CP webinars, we are also going to organize, and we regularly organize national conferences, residential refresher courses, seminars, workshops, and etc. etc. This year in Rajasthan, this committee is going to hold two national conference, one at Jodhpur and another is at Jaipur. Jaipur conference is going to be held on 30th and 31st of December 2025. I can say the New Year Eve celebration are going to be at Jaipur, and I will request all the members throughout the country to please attend that particular national conference. I would also request that this year WOFA is going to be organized by the ICI under the dynamic leadership of our President C. Nanda ji and Vice President C. Prasanna Kumar ji at Noida, and where we have target of 25,000 delegates, and not only from India, delegates are coming throughout the world. And friend, that is the opportunity where we can meet with the delegates of our country and other states and rather the entire world. And that's an opportunity where we will get the knowledge on the what is happening in the world in the field of accounts and finance and taxation. So I would request you that apart from attending national conferences, also attend the WOFA 2.0 this year to be held on 30th, 31st and January and 1st February 2026. Friends, something I would like to talk about the one of the requirement in the UDIN format, that is the auditor's opinion. I have heard that some of the members are facing issues while complying that particular requirement of auditor's opinion. Since I am the heading the UDIN directorate this year, so it is my humble duty to tell you that the first question asked under that particular compliance is whether this opinion is applicable or not on your this audit. Yes or no. So friends, here there is a confusion whether it covers tax audit or no, why we are asking this yes or no. So just to bring you in your kind notice that UDIN is being generated on various certificates also, where there is no need of opinion. So this particular clause make a segregation in between certificates or the opinion on financial statements. Or in another words, this particular clause is applicable on the opinion of financial statements only. So if there is an opinion on the financial statements, we will have to say yes. If there is no opinion on the financial statement, we have to say no. And meaning thereby, friend, tax audit, there are two parts of the tax audit. One is the opinion on financial statements that is covered by the 3CB clause 3 subclause A, and another is the opinion on that 3CD. So we need not to go we had to go for the tax audit cases also, yes. But thereafter, when the question is being asked, is there any modification to the audit? Then you will have to see that whether your report is clean on financial statement for the purpose of tax audit. Then you will have to tick the unmodified or the clean report. If there is a modification in your report of the tax audit of financial statement, then you will have to find whether it is um, uh, it is a disclaimer, whether it is qualified or whether it is the adverse opinion. So out of three, you will have to tick one. We are not asking what qualification the member has given. We are simply asking yes if it is qualified or not, if it is disclaimer, if there is any disclaimer or not. So don't worry about all these things. These are very simple things, and we are not asking anything in detail. And I am really happy that members are giving a very positive response on this particular inclusion in the UDIN, because this is something which will help us to represent before the government after a thorough research that what quality of audit our members are doing. So with these friends, I don't want to come in between you and Ayush, who is going to take some very important issues on the tax audit. And I think after his deliberation, there is a lot of uh, benefit we people are going to take. Yes, I just got a reminder that I'm to talk about the newly benefit for the members taken by the CMP committee, where I am the vice chairman and I'm heading this particular area of the members benefit. We have made three arrangements very recently, friend, just to share with you all. Number one, unsecured collateral free loan from HDFC Bank term loan at the rate of 10.60%, reducing rate, and the working capital loan at the rate of 11.60% with the minimum processing fees. And the bank is the HDFC Bank. So you can see the quality and what rate we have bargained, and it is very competitive in terms of the other players in the market for the chartered accountants, friend. Second thing, friends, which I want to talk about, we have also made an arrangement with the AU Bank regarding credit card. And in that credit card, there are two, three things which are very important, which I want to deal here, just to brief something. One thing that you are going to get the airport lounges, domestic airport lounges every year. Secondly, any member who takes that credit card will be entitled for 25% discount on the renewal fees being paid to ICI by that member. And uh, so this is also inbuilt in that particular credit card. Suppose take that credit card, or I pay the 8,000 fees, so the credit card company will give us 2,000 rupees rebate for that particular year where this is the entitlement is there. So these three things we have done as of now for the chartered accountant members. And other things, we are working a lot for the some life insurance part, some medical health insurance part, some other things which we are working a lot. I think let us wait for a month, so our members will definitely feel some good thing from the ICI side. So thank you, my dear friends, for attending this webinar. I request that attend in a very large number every time and give your suggestions freely to our committee. I can say the Guinea is working very proactively in the committee, and she is always ready to take the suggestions. So kindly come up with your suggestions and feedback so we can improve. Thank you. Thanks a lot. All the best. See you. Over to my dear friend Ankit.
Thank you, sir.
Thank you, sir. Thank you so much. Uh, these are very important things you told us about opinion given in UDIN and other benefits to the members in CMP. So we are waiting for it, sir. So now it's time to move into the core of our session. We are privileged to have with us Ayush Sahni, who will be speaking on an overview of income tax audit and detailed discussion on clause 13 and 18. Ayush Sahni, he has completed multiple exams and courses like forensic accounting and fraud detection exam by ICI and has diploma in information system audit. He has also delivered multiple sessions in internal audit and GST and was also invited by CII, FICCI, government department, etc. for lectures on GST and income tax compliances. Let's begin with Sir Ayush, sir, over to you.
Thank you so much, first and foremost, Satish, sir, the chairman of the committee, for inviting me, for giving me this opportunity for deliberating on this topic, which is very important, especially for practicing CAs of small and medium level towns, because tax audit is one of the thing which has been given us by the government, this opportunity. And even many people in especially in metros, they specialize in several fields, but tax audit is one thing which we can say due to which bread and butter of a small and medium practitioner works. So it is very important that we impart good knowledge to our members on this topic. So kudos to CPE committee led by Satish sir, vice chairman, secretary Gini ma'am, and several other staff members of the institute who are working day and night for ensuring that knowledge and upskilling of our members is being done. So thank you so much, moderator of today's session, Ankit ji, for giving a very elaborate, I would say, introduction. So this is a topic which is very, I would say, important for all of the small and medium practitioners of all the small towns to larger towns and even metros. Tax audit is prevalent everywhere, and we need to ensure that we are up to date with whatever new amendments, from institutes, whatever updates of institute are happening. So it is a very welcome step towards that aspect. So I'll share my slide and we'll get going with this. Ankit ji, I hope so. A full screen is available, visible right
Yes.
now.
Yes, sir. Yes, sir.
Nice. So first, my topic for today is overview of tax audits for chartered accountants, as well as a detailed discussion on clause 13 and clause 18. First of all, what I'll do is I'll try to give an overview of what tax audits are, what are we supposed to do, what is the expectation of income tax department and legislature from us when they have given us in income tax statute, they have given these powers, these opportunity to CAs. So what do they expect from us? What are the threshold limits and everything? I'll just give a bird's eye view because mostly detailed discussion will be on clause 13 and 18, but I'll just give a bird's eye view of what all we are expected to do, what all threshold is, and how all we get going about it. Okay, so what is tax audit? So it is an official inspection of financial records conducted by a qualified chartered accountant to ensure compliance with the Income Tax Act. The statutory requirement serves as an equality check mechanism, verifying the accuracy, completeness of taxpayers' financial statements. So in this audit process, we have to check various accounts, income statements, expense vouchers, deductions, claims, overall tax compliances. A CA meticulously reviews transaction records, supporting documents and accounting practices. तो ये जो process है ना, it is a very wide process. इसमें although it is stated income tax audit है, but इसमें all those practitioners जो इसको कर रहे हैं, they know इसमें हम GST aspect भी चेक करते हैं, हम ESI PF का भी चेक करते हैं, जितने भी expenses claims किए हुए हैं वो चेक करते हैं, हम we check all the expense vouchers, जो भी deductions claim कर रखी हुई हैं. So it is a very comprehensive audit which is being done. So members need to ensure they need to open like the doors of their mind, and they should be कोई भी aspect लगे where they feel that non compliance is being done, or there is some kind of violation of the statutory norms, they have to report it. Okay, so key components what we verify from this aspect would be accuracy of book of accounts and financial statement. We have to see, because see, although it is income tax audit being done, but as a chartered accountant, as somebody, as we know that accounting standards are being although notified by MCA and Government of India, but our institute has made accounting standards. So it is very imperative of us to know in detail all the accounting standard and ensure that those book of accounts and financial statements of our client, of the auditee, are giving true and fair view of the state of affairs of that entity. So we have to ensure that accounting standards are properly applied, of accounting policies are consistently applied. If there is any deviation from generally accepted accounting principles, we have to report it. So, and for the same reason, I would like to really congratulate CP committee, because they are, for each and every session, they are not only they are including like clauses of tax audit, but they are also teaching accounting standards also side by side for each session. Like they are having parallelly one accounting these clauses of tax audit as well as accounting standard. So it is very important and imperative these days, because without knowledge of accounting standard, I don't think so a quality tax audit can be done. So kudos to committee for this. So completeness of income disclosure from all the sources. We have to ensure that the entity, the assessee, the auditee of income from various sources has been disclosed in the book of accounts. For example, if income from a certain source is coming, although they haven't filed shown them in GST, but it is from the accruing in the bank accounts of the business, so it has to be reported. And if it is underreported and tax thereon is not paid, we have to report it. We have to give accordingly opinions in our tax audit report. So legitimacy of expenses and business deductions. So I've covered because in my clauses also this comes in detail regarding many times we have seen is that people try to increase their expenses, try to show bogus expenses or inflate the, I would say, the amount of genuine expenses. So we have to ensure that those transactions, those expenses are at arm's length price. If a person has done expenses, for example, a person has given professional fees to his relatives, many times we see even especially in like family owned companies and where entire family is working, or like for claiming expenses, what they do is professional fees they give. They are not deducting TDS, they are giving to like salaries and this expenses for professional charges and so more to their relatives, which is so much, I would say double or triple the market price. So we have to report it. Proper claim or deduction under various section. We have to ensure that the deduction under various section are proper and legitimate as per the requirements of the statute. Compliance with the maintenance of a requirement record requirement. For example, we have seen under section 44 AB and what all records are required to be maintained, whether the person is doing specified profession, where a person is doing businesses, and what all vouchers, in what all mercantile system of accounting, cash basis accounting, what all he is doing, and whether it is as per the requirement of the statute or not, and whether if he's required to maintain a book of accounts, whether he has maintained it, and when he's telling that has maintained it at his head office or whatever what is reported in his book of accounts, whether these are maintained at such place or not. Upon completion, auditor issues a tax audit report, as all of you must be knowing, in form 3CA and 3CB for private limited and all companies and all, it is form 3CA, and for the other entities like proprietorship firms and partnership firms and all, it is 3CB. So it has to be submitted. So legal framework and applicability. So tax audit provisions, as I've already stated, it is covered under section 44 AB of Income Tax Act 1961. The section establishes and conditions that trigger the mandatory requirement for businesses and professionals for operating in India for getting tax audit done. So if there is a business entity where the gross receipts are above 1 crore in a financial year, and the after amendment, it has been included that 10 crores if cash receipts and cash payment don't exceed 5% of total transaction, which is very less, especially in small and medium towns. So mostly what governs is that 1 crore limit. So if your sales turnover or gross receipts exceeds 1 crore rupee in a financial year, then you have to get mandatorily your tax audit done from a qualified chartered accountant, practicing chartered accountant. So professionals audit required when gross receipts exceed 50 lakhs during the financial year. And now this limit has been enhanced to 75 lakhs if 95% or more receipts are through digital modes. Presumptive. If business are opting for presumptive taxation under section 44 AD or 44 AE or 44 ADA, but the profits have been declared below the threshold limit, the prescribed threshold limit of 8%, 6%, or 50%, as the case may be. So if you're showing profits below that limit, then you have to mandatorily get your accounts audited. And that would be under section 44, I guess AB में सब क्लॉज ई वाले में है ना. बाकी में AB A में आता है जो हमारे 1 crore के ऊपर है, and depending upon section, I think so that is covered in some other session. So just giving an overview. So objectives, what are the objectives of tax audit? Ensure that accurate book record keeping. We as a CA, we have to ensure that the book of accounts have been maintained systematically according to accounting standards and properly certified by qualified CA, establishing foundation of financial transparency. We have to ensure that no window dressing is being done. Accounting policies have been consistently applied, accounting standards have been consistently applied. For example, AS9 revenue recognition from AS10 of plant property and equipment depreciation has been charged at proper rates, and all those other provisions of our accounting standards, AS2 inventory, evaluation of inventories, it has been done in proper manner. If it is not being done, then we have to report it in our tax audit report. Detection of discrepancies and non-compliances. If we it is quite a responsibility to ensure what are the gaps, errors, and deliberate misstatements being in financial statement for the purpose of doing tax evasion. And also if there are certain compensating error, if there is any kind of suppression of facts being done, because as we know, under the various provisions of income tax, for these kind of violations, there are heavy penalties. Under section 271 subsection 1 clause C, we know 100% to 300% of penalties are being imposed if there are suppression of fact, if there is deliberate misstatements are being done. So we have to ensure as a tax auditor that the accounts we have to check whether accounts which we are auditing are free from such kind of errors, deliberate misstatements, and such kind of omissions. So impetus lines on us to certify whether these kind of misstatements are not present in the financial statements that we are auditing. So facilitate income tax authority verification. So we have to enable the income tax authorities to efficiently verify the accuracy of income tax returns, deductions claimed, and overall tax committed without extensive independent investigation. So as all of us being a chartered accountants, we know that we are watchdogs and not bloodhounds. We have to do it within the within the boundaries of the statute, and what we are doing is an audit and not an investigation. But still we have to get a reasonable assurance for ourselves so that we have a sufficient confidence and satisfaction that it is free from misstatements and violations. So because not only it is our moral and ethical responsibilities and as requirement quite required from us by the institute, as required by our code of ethics, but also it is a moral responsibility towards the income tax department, towards the government, which have given us these powers. Because as we have seen recently, many other institutes, whether it being cost accountant institute, company secretaries institute, they all are fighting for getting this opportunity, for getting these powers of doing tax audit. But since the government has relied on us, on our wisdom, on our knowledge, and on our degree, then we should do justice to it. We should do justice to facilitate income tax department in ensuring that our tax audit is being done properly, and all the non-compliances, violations which we can get hold of by doing a reasonable check, we have identified it and reported it accordingly in our reports. So promote transparency and reduce penalty. Create a culture of compliance by ensuring voluntary disclosures, complete information, thereby minimizing the risk of penalties, interest, and prosecution. So as we know, this tax audit is done much more before assessments and everything. So if we do quality tax audits, it reduces burden on government a lot. It reduces the because a lot of expenditure is being done for investigations, for assessments, for faceless assessments, for all the scrutiny that scrutinies, search and seizures by the government. So if we do properly a tax audit, then the burden on government departments, on various government agencies, on income tax department reduces a lot, and thereby minimize on not only it is beneficial for the government but also for our taxpayer, because the assessee, the auditee, if all those sometimes they don't have that kind of knowledge, and they attend, and these accountants and their finance persons, they tend to overlook certain aspects and they don't have knowledge. So when certain misstatements, omissions, suppression of facts, and uh, any kind of error is I would say identified and corrected by us before the filing of ITRs, before the during the time of tax audit, it reduces huge amount of penalties, interest, and taxes for them as well. Because necessary corrective steps by way of payment of taxes, by way of correct reporting, is being done there and therein then only. So it is a very important preventive measure rather than merely a detective measure, encouraging taxpayers to maintain proper records throughout the year, voluntarily comply with tax obligation. Because many times people, for example, I would say, for example, in the assessment year 25-26, a person has come to you with all sorts of wrong records. His accountant knows nothing. He's also totally oblivious of the various statutory obligations. So, but when even in this year, if you have done his audit properly, you have given all the disclaimers, all the qualifications and everything, and you have done all the additions, okay, in your report you have added back everything, and although he might have to pay extra tax this year, but from next year onwards, all his records, he'll have a good learning, I would say, opportunity for him as well. From next year, his accountant will be quite alert. He will do all the compliances and see how much interest you have saved for that guy. If the same things would have been identified at the level of income tax assessments and search and seizures, how much interest, penalties, and taxes he would have to pay. So, and this is only paying for 1 year. From next year onwards, he will be more vigilant. His accountants will be more vigilant. His finance team will be more vigilant, and they won't do such kind of irregularities. So I would say it is a welcome step that we all should do vigilant audit. Who conducts the tax audit? So only a qualified chartered accountant holding a valid certificate of practice from the Institute of Chartered Accountant of India is authorized to certify and conduct tax audits. This can be any individual CA practitioner or a registered CA firm with practicing partners. So you all know that for tax audits, it is the government has given us the responsibility, us I would say the privilege also and powers also of doing this tax audit. So individual CA firm, maximum what individual CA firm, maximum 60 tax audits per financial year. And accordingly, if a firm has 10 partners, say, so 600 tax audits. So as per the recent development, most of us know that the earlier what used to happen, some for example, a CA has like done 50 tax audit, and his one of the partners has done only 5 to 10 tax audits. So his limit also used to get added in the he used to get benefit of the firm's limit. But now the restriction has been imposed on per partner per CA. So these limits apply separately for tax audit under section 44AB. So auditor's professional responsibility, as we've already stated, but I'd like to reiterate that thorough examination of book of accounts, vouchers, and supported documents, cross-referencing of financial data with tax returns, statutory registered, detailed disclosures in tax audit reports, covering all the prescribed particulars reporting any qualification, reservations, and adverse observations clearly, maintaining professional skepticism, independence throughout the audit. Because it is very imperative that we are independent, we are doing it properly, because nowadays institute has become very strict as far as these contraventions and quality of audit is being concerned. So I would request everybody to be very vigilant while doing tax audit. Don't try to save anybody. So next, key reporting requirements. So form selection, as we know, for entities whose accounts are subject to audit under any other law, like Companies Act, I have stated earlier also, like companies, and wherever the person is subject to audit under any other act, then form 3CA goes. And for entities not covered under audit under any other statutory requirement, then form 3CB. Comprehensive 3CB disclosures. Detailed requirement covering in form 3CD in itself is very detailed. It requires everything, and we should not try to like avoid it or give like disclaimer, like we avoid various clauses as just give NA. Wherever it is actually not applicable, then we should state, and we should try, because it in itself we have stated various things, but form 3CD in itself is very comprehensive, and if we just check for all the things which it has stated, if it, and all the contraventions which it requires to report, form 3CB and 3CD, if we just go by that also, then also we could tremendously increase the quality of our audits. So we should just before, whenever we sign for each audit, we should try and is my voice audible? I think so. Somebody has stated in
Yes, sir.
it's
It's
audible.
audible,
Na?
sir.
Yes,
Somebody
it's
has
audible.
written in like comments ki voice is not audible. I think so. Everything is audible. If certain technical glitches are coming, the members may write in the comment box. So it is in the form 3CB, 3CD in itself is are very comprehensive and very detailed. So if we go by that also, and please members, what they tend to do, and they have tendencies of just when they have done like 4-5 audits, they get to have some confidence. Yes, 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 sab theek hi hoga. Just they just try to, what you try to do for each and every audit, just thoroughly go for every question which the statute wants, है ना? जस्ट एक एक को फिर बार बार पढ़िए, क्या पता ऐसी कोई चीज जो आपने पिछले आपके टैक्स ऑडिट में एप्लीकेबल नहीं थी, इस बार एप्लीकेबल हो। देयर माइट बी, जब आप करते वक्त ना, पढ़ते वक्त आपको कुछ ना कुछ ऐसी चीज स्ट्राइक हो जाएगी। मैंने ऑडिट करा था, आई डन वाउचिंग वेरिफिकेशन, माय स्टाफ हैड ब्रॉट दिस काइंड ऑफ ऑब्जर्वेशंस, यस दिस इज एप्लीकेबल हियर, so that we do not under report, we do properly reporting, because as chartered accountants, see, I would like to reiterate in a different way. Those were also the chartered accountants, the जिनकी क्वालिटी के कारण we today are, and जिनकी क्वालिटी, जिनकी रेपुटेशन एंड जिनकी रिपोर्टिंग के कारण we today take pride in being a chartered accountant. उन्होंने इस तरीके का अपने इमेज बनाया था, इतना क्वालिटी बनाया था, दैट टुडे वी हैव गॉट ऑल दिस। पहले तो इनकम टैक्स एक्ट में ये प्रोविजंस नहीं थे टैक्स ऑडिट के। इवन जितने भी हमारे अलग अलग स्कीम जो स्टैट्यूटरी हमें पावर्स दी गई है, काफी ज्यादा, क्या कहते हैं, इवन यू से see in several acts, various project, various banks, they want from CAs, and every from various I would say industries department of various कुछ subsidies लेनी होती है, तब they want CA certificate. So we should uphold to that reputation, we should improve it, we should, ऐसा ना हम करें अपना क्वालिटी ऑफ ऑडिट या ज्यादा नंबर ऑफ ऑडिट्स पकड़ लें कि जिससे कि हमारी जो प्रोफेशन की एज अ होल जो रेपुटेशन है वो डिग्रेड हो जाए, कि जो हमारे जो क्या कहते हैं, आई वुड से फोर फादर्स और एंसेस्टर्स इन दिस प्रोफेशन, व्हाट इमेज दे हैव बिल्ट, वी शुड एटलीस्ट मेंटेन इट, एंड आई वुड रिक्वेस्ट कि हम उसको और बढ़ाएं, ताकि गवर्नमेंट एंड वेरियस अदर बॉडीज एज वेल एज द प्राइवेट एंटिटीज, दे increase their faith on us. Whatever we sign should be like a पत्थर की लकीर जो कभी change नहीं हो सकती है, and everybody has blind faith on it. So we all should do whatever it's within our ambit to justify the powers given to us. Then indirect tax registration details, mandatory disclosure of GSTN and other applicable indirect tax registrations, cross verification with GST return and reconciliation statement. So we have to verify whether the turnover, whether the several like GST payable and GST receivable, these are there's an asset and there's a liability, whether these are appropriately being reported in the financial statements, whether the turnover as per GST is appropriately reporting, whether the debit notes, credit notes as per GST are properly reporting. Nowadays we have clause 44 where we have to report how much amount of purchases we are doing from composite dealer, from for various expenses, from unregistered parties, from registered parties. For we have to give proper expense wise I would say bifurcation. So it is quite imperative of us to see in detail. We have to see GSTR 2A, GSTR 2B in detail. We have to see for each expense. We have to एक एक को टिक मारना पड़ेगा आपको. हम इसको जस्ट वो नहीं कर सकते. I've seen many audit reports of CH. What they do is they write not applicable. How it is not applicable when the person is a registered person? They see the client data doesn't provide us these sufficient information so as to give reporting on this clause. How is it possible? Your client is registered party. You have access to his GST records. You have access to his GST login ID password. You just download the GSTR 2A 2B. You'll get to know वो एक्सपेंस रजिस्टर्ड पार्टी से हुआ है, अनरजिस्टर्ड से हुआ है, या फिर वो ये जो है कॉम्पोजिट से हुआ है. सो वी नीड जो चीजें व्हाट वी कैन वेरीफाई ना, वी शुड चेक कि जहां पे एजिंग ऑफ डेटर्स है, एमएसएमई वाला क्लॉज है, सेक्शन 43BH है, तो वहां पे हमें इंश्योर करना है कि हम वो चेक करें. जहां पे नहीं, जहां पे बिल्कुल ही टोटली इट्स अपेरेंट आफ्टर सेवरल अटेम्प्ट्स कि ये चीज नहीं हम वेरीफाई कर सकते, देन वी शुड गो फॉर अ डिस्क्लेमर एंड नॉट एप्लीकेबल. और ये एक चीज है, आपने मैक्सिमम चीजें मैं देखता हूं कि लोगों ने क्लॉज 44 को नॉट एप्लीकेबल कर दिया, एमएसएमई को नॉट एप्लीकेबल कर दिया, स्टॉक में सब कुछ चीजें कर दी. तो चेक किया क्या आपने? हर चीज तो डिस्क्लेमर दे दी और फिर बाद में आप अनमॉडिफाइड ओपिनियन दे रहे हैं यूडिन के पोर्टल पे जाके. हाउ इज इट पॉसिबल? तो आप डिस्क्लेमर दीजिए ना ओपिनियन का, और अपने टैक्स ऑडिट रिपोर्ट में भी डिस्क्लेमर दीजिए या उसको क्वालिफिकेशन कीजिए. तो हाउ इज इट पॉसिबल? इट इज मतलब टोटली आई वुड से मतलब कि टोटली आयरॉनिकल एंड पैराडॉक्सिकल कि आप ऐसे कैसे ओपिनियन दे सकते हैं. तो यू हैव जहां जहां पॉसिबल है, प्लीज ट्राई टू गो इन डेप्थ फॉर ईच एंड एवरी एस्पेक्ट of tax audit report, for each and every clause which is mentioned in tax audit report, so that we can give a true and fair reporting. Auditor's observation and qualification, clear statement of any disagreement with management's accounting disclosure, reporting of any adverse findings, non-compliance issues, or any other matters which is of critical importance. Critical due dates. Tax audit report must be furnished typically before 30th of September, but as we know in this year, due to several reasons, especially floods and weather conditions and technical glitches on income tax portal, the same has been extended to 31st October. So I would say we should take the most best out of it and do in as much detail as possible these tax audits. So these are digital filing. So from past few years, पहले तो हमें जो टैक्स ऑडिट रिपोर्ट होती थी, ये जो है हमारे डीएस ये जो क्लाइंट की एक्सेप्टेंस होती थी, हमारी तो रिपोर्ट जो एज चार्टर्ड अकाउंटेंट हमने फाइल करनी है, इट हैज टू बी डन थ्रू डीएससी. लेकिन जो क्लाइंट ने एक्सेप्टेंस होती थी, दैट आल्सो यूज्ड टू बी डन थ्रू डीएससी ओनली, बट नाउ इट कैन बी डन थ्रू ओटीपी, आधार ओटीपी एज वेल. सो इट इज अ वेलकम स्टेप. कुछ सालों से last 1-2 years it is being done, so it is a very welcome step. So amendments, as we know, there recently has been amendments where tax audit limit has been increased from 1 to 10 crores, but here's the catch. There is a rider that in case of tax cash receipts and payments don't exceed 5%, in that case only the 10 crore limit applies. Recently MSME For MSME, there is a very good amendment which has got notified. That amendment significantly reduces compliance burden for small taxpayer, encourages digital economy adoption and formalization of transaction, digital transaction relief for even the professionals who are doing getting their accounts audited. The limit has been increased from 50 to 75 lakh, but the catch is the 95% of the receipts should be through digital or banking modes. So rationale behind it is, so why is because government is going towards digital India and it is promoting banking transaction. So for the same reason, it is increasing the threshold limit for the people who are doing transactions actually through banking channel. So it is a very welcome step because if an amount is coming through banking channel, it will directly and indirectly have a very good impact on our economy, on our GDP, and many kind of tax evasions and many dubious activities and illegal activities like terror financing and everything, hawala and all, where these cash channels are involved, will get disrupted. So it is a very welcome step, and we acknowledge government's efforts towards going towards a digital economy. Common myths and realities about tax audit. So here is some myths about tax audit. Professionally filed returns are audit proof. So any income tax return, regardless who prepared it, can be selected for scrutiny and or audited by authority. Professional preparation reduces error but doesn't guarantee exemption from examination. So many of people sometimes say that, and even in some articles and all I've read, that people say if it's got proper returns are filed and proper audit are been done, the scrutiny won't be selected. So government have their own checks and balances. They have their own online, I would say, turnover limits, cash deposit, cash withdrawal, and several other nuances they consider. So if your case falls in those threshold limits, then it will get selected in scrutiny. So as such, it is there is no kind of insurance or no kind of assurance that you can give to a person that if your person it is professionally and properly professionally audited, you will not get selected in scrutiny. So, but the guarantee is that if it is professionally audited with thorough attention to details, addition will can't be done by the authorities, because all the things you might have earlier only seen and reported and get the tax deposited. Tax auditor are always intimidating and versatile. So most tax auditor routine, systematic, conducted and documentation. They're designed to verify compliance, not interrogation. So many people think that tax auditor, especially taxpayers, what they think that it is a intimidating process, and they ask many vouchers and everything. So it is not an intimidating, it is a compliance purpose. When they open a company, when they open some business and commence it, so they agree to various requirements of compliance requirements of the government. So one of these are tax audits if you cross the required threshold limit. So if they are filing returns in GST returns and agreeing to all other requirements, so one of these is tax audit. So it is not intimidating, it is a regular compliance work which they have to do. Low income earners never get audit. The tax authorities use sophisticated risk-based selection criteria, as I reiterated, as I already mentioned. Across all income levels, unusual deductions, mismatched information, and random selection can trigger on audits regardless of income magnitude. Best practices for audit excellence. So maintain meticulous documents, set realistic expectation for about time audit scope, implement quality procedures, develop firm level checklist, standard audit procedures, ensure all audit assistants follow consistent policies, documentation standards. Remember that as a CA, your signature on tax audit reports carries a legal and professional weight, and always maintain independence, objectivity, and adherence to professional standards. Ensure timely and accurate filing. So as a gist, I would say you should have proper SOPs at your firm level also. You should द रिक्वायरमेंट जो स्टैट्यूट बोलता है वो तो है ही, वो आपको चेक करना है, बट उसके कैसे उसको वो प्रैक्टिकली इम्प्लीमेंट किया जाए, उसके लिए यू शुड हैव योर एसओपीज एट योर फर्म लेवल फॉर योर आर्टिकल्स, योर स्टाफ, योर सीएस इन योर ऑफिस शुड नो हाउ टू प्रॉपरली डू इट प्रैक्टिकली, एंड उसमें आपके जो भी चेक्स एंड बैलेंसेस है शुड बी डन. सो यू एंड इसमें आपको मेटिकुलस डॉक्यूमेंटेशन मेंटेन करनी है. एनी टाइम आई हैव सीन दैट लोग जो होते हैं वो डॉक्यूमेंटेशन मेंटेन नहीं करते हैं या फिर उनकी फाइल्स गुम जाती है. तो प्लीज, आजकल तो एआई का जमाना है, आजकल ये वी हैव दीज डेज technology so advanced, even we have various kind of clouds, we have Google Drive and all things. We should keep all our records on cloud, and we should keep a copy of it in hard disk, because it is only our insurance against various kind of scrutiny we can get through institute, from governments, from income tax department. So we should ensure कि हमारा प्रॉपरली हमारा जो वर्किंग पेपर्स हैं वो प्रॉपर बने हैं, डिटेल्ड में बने हैं, और वी हैव प्रॉपरली safeguarded it. So implement quality control procedures. We should ensure proper quality control procedures. We have it. There is a maker and a checker. For example, one of our team members, like articles, are doing for example data feeding in TCD and everything. So there should be somebody who is checking it, and there should be multiple layers, and then it should get to engagement partner who will be signing it. And there should be proper audit trail of everything, how it has happened, who has checked it. And I would request members कि many times members say that कि हमारे staff ने audit कर दिया, our staff has audited it, and we don't, मतलब in for after 2-3 years, when the scrutiny comes and when some kind of questioning comes, what do we do? Or we don't, neither that staff is present nor we have the working paper. How do we report? Please ensure to get your staff accountable. जो भी आप बना रहे हो, फॉर एग्जाम्पल मेसर्स एबीसी private limited, for you have getting its tax audit done. So who has done its vouching? Mr. A has done his accounting. Mr. B has Mr. A has done its accounting. Mr. B in your staff, Mr. A जो client का accountant है, इसने accounting किया, उसका नाम लिखिए. The Mr. B, your junior staff who has done the vouching, write his name and write what purpose has done. The other person who has checked it, write his name and what thing he has done, and get signs of everybody. आपकी फाइल पे एक फ्रंट पे होना चाहिए. जब आपका टैक्स ऑडिट कंप्लीट हो ना, आपके साइन करने से पहले प्लीज एंश्योर एवरीबडी साइंस इट, किसने क्या क्या रिस्पॉन्सिबिलिटी की है. सो अगर कल को कोई इशू आता है, कल को कोई आपको क्वेश्चनिंग होती है, you know who to contact to and who you can get accountable. We as CAs can be easily, we are like I would say बहुत ही एक वो जो होती है ना, शरीफ कौम होती है ये सीएस की, और इजी, वन ऑफ द मोस्ट इजी टारगेट्स. जीएसटी में कुछ हो, इनकम टैक्स में कुछ हो, गवर्नमेंट में कहीं पे भी कुछ हो, सीएस आर द मोस्ट इजी टारगेट, इजीली हेल्ड अकाउंटेड फॉर. हमने हर जगह साइन करके रखे होते हैं, हमारा हर जगह यूडिन है, बट यू नीड टू मेक, पहले तो यू शुड बी वेरी जुडिशियस वाइल साइनिंग. ऐसे ही कुछ नहीं साइन कर देना, अपने प्रॉपर चेक्स एंड बैलेंसेस करने हैं, अपना प्रॉपरली सारी चेकिंग करनी है, और उसके बाद यू नीड टू इंश्योर कि उसमें ये जो है आपने जो साइनिंग, ये आपके जो भी जितनी आपकी टीम के मेंबर ने वो काम कर रखा है, गेट इट साइंड, और उसकी जो कॉपीज हैं अपने पास फिजिकली भी रखिए, अपने क्लाउड में भी रखिए, अपने पास हार्ड डिस्क में भी रखिए, ताकि कल को कुछ हो. वी यही ऑल दीज थिंग्स, यही तो जो जितनी भी हमारी टॉप जो क्या कहते हैं फर्म्स हैं जो बाहर की हैं, वो दीज दे एक्सरसाइज ऑल दीज मेजर्स, दे एक्सरसाइज मैक्सिमम टाइम इन सेफगार्डिंग देमसेल्व्स. क्योंकि जो आपने काम किया, अगर आपने उसका ट्रेल ही नहीं रखा है, तो आप कल को अपने आप को कैसे सेफगार्ड कर पाओगे. सो आई रिक्वेस्ट ऑल आवर मेंबर्स टू प्लीज इंश्योर safeguarding yourselves and maintaining a proper trail of everything what you've done. So CA's role in tax audit excellence. So CAs are one of the fundamental pillars, I would say, of India's taxation framework. These जो tax audit वो करते हैं ना, ये टैक्स ऑडिट एक फंडामेंटल पिलर है टैक्स ऑडिट का, क्योंकि मोस्टली जो यही एंटिटीज हैं जो हाईएस्ट टैक्स पे करती हैं, और वी एज the trusted gatekeepers between the taxpayers and the tax authorities, and to ensure that accuracy of financial information and ensuring adherence to complex legal requirements of the Income Tax Act. This responsibility demand not just technical competence but also unwavering professional integrity. So proactive audit management होनी चाहिए, audit approaches throughout the year rather than year ends. So we should ensure कि जैसे अभी भी every time we look out for ये जो है कि extensions and all, but why, जब हमें पता है कि मार्च में year close हो गया है, we should and हमारे पास वो client है, we I know कि maximum जो है पार्टी के एंड पे ही प्रॉब्लम होती है, द अकाउंटेंट डजंट ब्रिंग्स डेटा, द पार्टी इज क्वाइट कॉम्प्लेसेंट और पार्टी इज नॉट बॉदर्ड, बट वी रिस्पॉन्सिबिलिटी तो हमारी है, एंड जो इसकी रिपरकशंस भी हमें फेस करने पड़ते हैं. तो टू इंश्योर क्वालिटी ऑडिट इज बीइंग डन, प्लीज ट्राई टू गेट योर वर्क स्टार्टेड फ्रॉम अप्रैल ऑनवर्ड्स. आफ्टर मे तो आपके पास टीडीएस की डिटेल्स भी आ जाती हैं, तो प्लीज ट्राई टू नॉट वेट टिल सितंबर to get your thing started. Try to get at least provisional data ले लो उनसे, जो फाइनलाइज नहीं हुआ उसमें उनको जो उनकी गलतियां हैं वो उनको बता दो. कुछ एंट्रीज उन्होंने गलत की होगी, कोई टीडीएस जमा नहीं कराया होगा, तो उनके लिए भी टैक्स सेव करने का एक मतलब कि काफी उनको इंटरेस्ट और पेनल्टीज और वो सब बच जाएंगी. तो वो चीजें अगर हम थोड़ा सा एफर्ट करें कि हमें पता है दिस इज अ वेरी इंपॉर्टेंट पार्ट ऑफ आवर प्रैक्टिस, एंड वी लास्ट डेट्स पे हम अच्छे से वी कांट चेक एवरीथिंग इन डिटेल. So for from quality aspect, from ensuring our these professional aspect also, we should ensure कि we try to do it timely. Continuous professional learning, we should attend as many as seminars, webinars, all the latest journals of income tax, and all we should read thoroughly. Nowadays many online journals are also coming. There are several sites, free websites like Tax Guru, and so many live law and taxmen. So we should access them, learn from wherever it is possible, because कोई भी ऐसा मैटर जो आपने पढ़ा होगा, हाँ, and when such certain such thing comes before you, you can identify it and report it accordingly and get it. अगर आपने पढ़ा ही नहीं होगा, you are totally oblivious of the fact, you are totally unaware of the latest legislations, latest developments, latest amendments, latest judicial pronouncements. So how can you report it? So it is very important that you as a professional, और कोई भी professional हो, I would say everybody does it. आप lawyers को देखो, वो पूरा टाइम अपने आप को अपडेट रखते हैं, डॉक्टर्स को रखते हैं with the latest development. So as CAs also we need to ensure कि हम continuously पढ़ते रहें और अपने आप को upskill करते रहें. Building a client trust, your role extends beyond compliance about strategic value of clean audits, understand obligations, and you should ताकि इससे अगर आप चीजों का, अगर आप everything you are, हर एक को आप under the carpet लेके जा रहे हो ना, all the dirt of your client, see, not only you will get into problem, but your client will also get a problem. So as a trusted person, so as a person of repute, you should ensure to guide your client in a true manner as a trusted advisor, and guide him in the right way rather than telling him various ways of tax evasion and all that, because it will only get him into trouble. So understanding clause 13 and clause 18. So ये मैंने मोस्टली सारा टाइम जो है अपना डिटेल में टैक्स ऑडिट को कवर करने में लगाया, क्योंकि these clauses are not so much, I would say, so much so comprehensive and so much so in detail. So I'll cover it soon. टैक्स ऑडिट का तो हमने ये वी हैव कवर्ड एवरीथिंग. क्लॉज 13 क्या होता है? मेथड ऑफ अकाउंटिंग, आईसीडीएस एंड आईसीडीएस कंप्लायंस. ओके, सो व्हाट इज दिस कि आपने कौन सा मेथड ऑफ अकाउंटिंग फॉलो किया हुआ है ना, वेदर इट इज मर्केंटाइल सिस्टम ऑफ अकाउंटिंग, कैश बेसिस अकाउंटिंग, व्हाट काइंड ऑफ अकाउंटिंग मेथड यू आर फॉलोइंग, you have to report it. और क्या मेथड ऑफ अकाउंटिंग चेंज हुआ है from last year, whether the method of accounting has changed as compared to last year. because if it has done, then we have to report it. Because if accounting method, accounting standards, its implication, and like earlier you are following FIFO method of accounting, now you're following LIFO, then the entire cost valuation of inventories, it changes. So you need to report it. For example, earlier you are following mercantile, now you're following cash basis. So how it will happen? You have to see the prior period item की entry proper डली है, जो earlier cash basis accrual पे जो पेबल के खर्चे पड़े थे वो कहाँ गए लास्ट ईयर के, अब कैश बेसिस पे कर दिया तो सारा कुछ ऑल द फाइनेंशियल इंफॉर्मेशन विल बी डिसरप्टेड, मतलब टोटली ट्रू एंड फेयर व्यू तो देगा ही नहीं वो उसमें किस तरीके से। फिर देन यू हैव टू सी वेदर उसका जो इम्पैक्ट है जो आगे लाया गया है कि नहीं लाया गया है, उसमें किस तरीके से उसकी अकाउंटिंग कर रखी हुई है, हाउ इट्स ट्रीटमेंट्स एंड एडजस्टमेंट्स हैव बीन डन, वेदर इट रिफ्लेक्ट्स अ ट्रू एंड फेयर व्यू। और अगर ऐसा चेंजेस किया यहाँ पे तो रिपोर्ट करो, अपनी अकाउंटिंग ऑडिट रिपोर्ट में भी इसको प्रॉपर्ली रिपोर्ट करो, सो दैट जो भी रीडर ऑफ फाइनेंशियल स्टेटमेंट है ना, आप देखिए कितने सारे लिस्टेड कंपनीज है ना, आई वुड नॉट स्टेट ऑल बट सम ऑफ लिस्टेड कंपनीज की ऑडिट रिपोर्ट्स पढ़ी है, उन्होंने मेटिकुलसली हर एक चीज की अकाउंटिंग पॉलिसी की उसका डिस्क्लोजर दिया होता है। तो प्लीज जैसे ऐसी कोई चीज होती है ना, अपनी रिपोर्टिंग इतनी अच्छी कर दीजिए ना, आप चाहे ऑडिट थोड़े कम पकड़ लीजिए है ना, 25% ऑडिट्स कम लो, लेकिन जो भी करो ऐसी क्वालिटी दो कि मतलब कि आपके ऊपर कभी वो ना आए, उस पे उंगली ना कोई उठ पाए। और जब व्हेन यू इंश्योर ना, व्हेन यू आर बिकमिंग मास्टर इन योर सब्जेक्ट, तो ऑटोमेटिकली आपको लग रहा है कि नहीं मैं ऐसे करूंगा तो क्लाइंट भाग जाएगा या ऐसे करेगा, टाइम जो क्लाइंट भागेगा ना वो उसी टाइप का क्लाइंट होगा, और सुनो लेटर यू विल गेट व्हाट काइंड ऑफ क्लाइंट्स यू डिजर्व। जो क्वालिटी क्लाइंट्स है ना वही आपके पास रहेंगे, एंड दो जो क्लाइंट्स आप जो प्रॉपर के कहते हैं लिस्टेड कंपनीज मोर और लेस, आपको उस टाइप के क्लाइंट्स फिर आना स्टार्ट हो जाएंगे हु डिमांड सच काइंड ऑफ एक्सपर्टीज, सच काइंड ऑफ कैरेक्टर, सच काइंड ऑफ डिसिप्लिन। सो अपना ये चीजें प्लीज थोड़ा थोड़ा स्टार्ट करके, इवन यंग मेंबर्स जो सुन रहे होंगे आई वुड से उनको भी मैं ये बोलूंगा कि थोड़ा थोड़ी चीजें अपनी ना अप स्किल करो, अपने आप को थोड़ी थोड़ी इंप्रूवमेंट्स अपनी ऑडिट रिपोर्ट्स में हर साल करते रहो। जैसे कुछ चीजें जैसे कि प्रॉपर फॉर्मेटिंग होगी, अब नॉन कॉर्पोरेट एंटिटी का फॉर्मेट ऑल्दो अब क्या कहते हैं डेफर हो गया, लेकिन फिर भी कोशिश करो कि जैसे कुछ थोड़ी बहुत उसमें बना दो, कुछ ना कुछ चीजें ना अपस्किल करते रहो, अपनी रिपोर्टिंग अच्छी फॉर्मेटिंग करो, चाहे लंबी रिपोर्टिंग करो, लेकिन ऐसे लगना चाहिए कि मतलब एक अच्छे क्वालिटी सीए से काम होके आया हुआ है, एंड हाउ मच इन डिटेल द सीए हैज गॉन व्हाइल डूइंग दिस ऑडिट। तो इससे नॉट ओनली आपको पर्सनल सेटिस्फैक्शन होगी बट ऑल्सो योर I would say respect as a chartered accountant and respect of our community as a whole will increase. So why clause 13 matters? Ensures application of accounting principle across all taxpayers, creation of a level playing field, and enabling fair competition for financial result of tort tax purposes. So mandatory disclosure होता है, prevent opportunistic I would say switching between accounting methods without proper justification. इसकी वही मैंने जैसे पहले बोला, how I earlier stated that if this reporting is not done every year, the client's finance team will change, accounting team will change their accounting policies for their benefit. So it is very important that we do proper reporting in it. Now, clause 18. This is also very important clause. I covered it earlier also, that payment to specified persons, whether payments to specified person covered under section 40A subsection 2 clause B. So it has been done properly or not. So if payments are being done to like relatives, directors, partners, and other such persons, whether it is being done properly, where payments exceed 50,000 rupees. So are these payments at arm's length price? If these payments are done for the mere purpose of tax evasion, then you should report it. And client ko bhi once you report it na, client also gets to know ki this is wrong and he is not supposed to. 1 year you do the addition, you add back everything, so from next year onwards he'll not do it. So you have to you have to guide him accordingly that this is this is not allowed. The Income Tax Act disallows doing such kind of. What he does is he has like 5 people in his family, he'll put professional charges to all of them. If his certain relative, he's a CA, he'll put consultancy charges of a humongous amount to it. So this is not allowed. We need to give him proper consultancy in this, because tomorrow when income tax department will disallow it and create demand, then he will say that you have not told me earlier, you have not guided me earlier. So we need to ensure that we need to alarm them. We need to kind of educate them of these tax avoidance techniques are not some kind of these rocket science. Everybody, these are very simple childish things they are doing, and it will easily get caught by the income tax department, and afterwards they'll have to pay heavy price for it in the forms of interest, penalty, and various taxes. Documentation verification. The auditor must verify the genuineness of transaction, examine supporting documents, ensure that proper bills for it is there, proper contracts, proper agreements are done. Practical compliance tips for auditors and assessees: maintain accounting consistency, ensure that it is being done in a consistent manner. Related party documentation has been done properly, a comprehensive records, especially for specified persons, written contracts, approvals, comparative market rates, invoices. They have taken quotations from multiple 5, 7, 8, 9 vendors. So everything they have done, that you need to ensure कि ये सब कुछ हो रखा हुआ है, and then also इसकी reporting तो बनती है if above threshold limit किया हुआ है, but you need to ensure अगर किसी के साथ भी कर रखा हुआ है, the proper contract approvals, proper notarization, affidavits, and everything is on record as per the requirement of that agreement. So leverage technology, use e-filing utilities, accounting software with built-in ICDS. Nowadays, so whoever does tax audit, they know ICDS computation modules and ICDS disclosures are all there pre-filled. You just have to select the option. So use these kind of updated new softwares, updated utilities to ensure that timely and proper reporting is being done. Common challenges are how to address. And I think so. I've covered all of it earlier. Only ICDS quantification, inadequate documentation. We should ensure that proper documentation, whether in the form of contracts, agreement, commercial justification, or evidence that it is being done at arm's length price. We need to have proper evidence. If it humongous amount of transactions of expenses are being done with the related parties, we need to have justification whether it is being done at arm's length price or it is being done just to evade taxes, to inflate the expenses and decrease the profits. It is just, if it is done just with the benefit of the intention of tax evasion, then we need to report it. So in case of any of these non-compliances, penalty under section 271B for later incorrect audit reports can be imposed and impacting cash flows. And not only that, but also your reputation, your bank accounts could get attached, your properties can get attached. We need to guide our clients regarding all of these repercussions. So mostly I've covered all of this also. These are case studies in manufacturing firms. Inventory valuation method changes from FIFO to weighted average or LIFO, and we need to report it, because otherwise it will not give a true and fair view of state of affairs. And like professional services firm, if there is they are taking professional services from a related party, then we need to give a disclosure of this in clause 18. The ICDS, proactive ICDS compliance, trading, tracking, this also have covered. So by doing proper compliances, especially of these two clauses, there will be not only enhanced credibility of client before income tax department, but also for various investors, lenders, and whoever is a reader of their financial statements. And we should do continuous learning to stay updated with respect to the various clauses of this tax audit, by going to learning judicial precedents, CBDT circulars, various articles in various journals, taxation journals. We should be diligent, transparent, and compliant. These are the pillars of a successful tax audit. So I hope so it will be helpful to all of you. If you have any queries, you can ask me. So while closing, I would say I will just reiterate a quote which I think so Our president also says many times, and it is very, very apt for our profession, that we should be very passionate about what we do. He said a young man, he was about to be hanged. When he was about to be hanged, he took a piece of charcoal and wrote with it about he just it was midnight, he was about to be hanged, and he wrote with a piece of charcoal on the walls of his prison. He was Bhagat Singh. He wrote, कुछ इस कदर वाकिफ है, कुछ इस कदर वाकिफ है मेरी कलम मेरे जज्बातों से, कि इश्क लिखना चाहूं तो भी इनकलाब लिखा जाता है. So be fearless, be unapologetic, be relentless in the pursuit of your dreams. Become the best chartered accountant you ever know. Become the hardest working person in the room. Sky is the limit for you. Thank you so much, everybody. Thank you so much, CP committee for having me over here. I hope so I am able to do justice to this opportunity.
Thank you.
Thank you so much, sir.
Thank you, Ayushi, for such an informative and provoking talks about an overview on income tax audit. We'll open now the floor for the short question and answer session. There is one query of a member who is asking whether an SSC doing future and option trading may turnover up to 10 CR is required to be audited.
See, up to 10 CR, if he's having for the purpose of seeing the limits, if he's having in current account, वो बाकी सब भी कर रहा है, transactions कर रहा है, और वो कैश में हो रही है, तो वो 5% से above जाएगा, then he'll have to get his accounts audited.
Or if only he's doing future and option trading.
If only future and option, and that is entirely from a banking channel, then he is not. वहां पे फिर वो 95% वाला वो आ जाएगा clause कि all the expenses and all that are getting. But मोस्टली हम जो ग्रॉस रिसीट्स की, इवन जब जीएसटी में भी टर्नओवर देखते हैं, टर्नओवर के डेफिनेशन में, तो हमारी एग्जाम्प्ट सप्लाईज, बाकी सारी सप्लाईज भी आती है. वैसे इसमें भी हम देखेंगे कि बाकी मोस्टली व्हाट आई सी इज, उसमें लोगों के बिजनेसेस भी होते हैं, वो साथ में वो काम भी कर रहे हैं. और तो हमें वो जब टोटालिटी में देखें तो कैश में भी उनके खर्चे हो रहे होते हैं. दे सर्टन पीपल से दैट उन्होंने उसके लिए जैसे ट्रांजैक्शन जो फ्यूचर एंड ऑप्शंस या कुछ करके रखा है, एक आधा बंदा भी रखा हुआ उसके लिए. सो दे हैव एम्प्लॉयड पीपल आल्सो, दे गिविंग कैश इन सैलरी एंड दे स्वीपर्स एंड एवरीथिंग. जब उसमें देखें, जब वो 5% से ऊपर जाता है ना, then these provisions are invoked. So for that purpose, I think so tax audit will be applied. If all these are not in his case, there's just a person, he's doing FNO, and then it goes above that, and everything is through banking transaction, then these provisions will be applicable for him. Above 10 CR, he'll not be required. Up to 10 CR, he'll not be required to get his account audited.
Thank you, Ayushi. Now we have till now 553 registration in this session. It's a very good number. So we continue. Now we have Hitesh Malu with us, who will be speaking on Accounting Standard 9. He is a qualified chartered accountant with over 5 years of experience in audit, taxation, and financial management. He completed his articleship from T.R. Chadda and Company, Mumbai, and has associated with the firm since 2016, handling corporate statutory audit, tax audit, internal audit, trust audit, and RERA audit. He has extensive experience in auditing real estate entities and educational institutions, and also deals with matters related to ITR filing, GST corporate law, trust taxation, and compliances under accounting and auditing standards. He manages assignments involving finance and accounts, project implementation, monitoring and fund management, and was promoted as partner in the firm in January 2004. Now I would invite our second speaker, C. Hitesh Malu, to take over and continue. On to you, sir.
Thank you so much, sir. Am I audible?
Yes, sir.
Hello, everyone. A very good afternoon, especially after a wonderful insight provided by Ayush sir on tax audits. First of all, I would like to thank Satish sir, Vishnu sir, and Ankit sir, and all other distinguished members associated with the CP committee for giving me this opportunity to throw a light on Accounting Standard 9, that is on revenue recognition. I truly feel very much privileged to be a speaker on this prestigious platform. So now the topic for our discussion is AS9. Let me share the PPT. So, is the presentation visible?
Yes, yes, sir.
Okay. So now the topic for discussion is AS9. This is a simple yet a significant accounting standard mandatory for all enterprises to comply. So let's talk about the history of this accounting standard. The accounting standard was issued in 1985 and it was made mandatory for all enterprises from 1st April 1995. And currently this is applicable on all entities level 1, level 2, level 3, level 4. And the standard is currently notified as part of Company Accounting Standard Rules 2021. So it means any non-compliance of this accounting standard will bear the consequence of non-compliance of Companies Act itself, much like any other standard. So it explains the gravity and importance of this accounting standard. It assumes that the three fundamental accounting assumptions, going concern, consistency, and accrual, have been followed in the preparation of and presentation of financial statements. And the accounting standards are intended to apply only to items which are material. So let's start with what Accounting Standard 9 covers. As we all know, Accounting Standard 9 is all about revenue recognition. So it is the recognition of revenue in course of ordinary activities in case of sale of goods, in case of rendering of services, and in case of use by others of enterprises resources yielding interest, royalties, and dividends. Accounting Standard 9 also covers effect of uncertainties on revenue recognition. Even if uncertainties is not initially there, but subsequently any uncertainty arise, then also this scenario is covered by Accounting Standard 9, and it also provides some disclosures which needs to be complied. What Accounting Standard 9 does not cover? It does not cover revenue from construction contracts. It does not cover revenue from hire purchases or lease agreements. It does not cover revenue from government grants or similar subsidies. And it also does not cover revenue of insurance companies from insurance contracts. Though in all these four cases, these revenue are from the ordinary course of business itself, but there are special considerations for these transactions. So these are not covered under Accounting Standard 9. So let's start with the definition of revenue. As per Accounting Standard 9, gross inflow of cash, receivables, or any other consideration, it may be in kind, arising in the course of ordinary activities of an enterprise from either sale of goods or rendering of services or use of enterprises resources yielding interest, royalties, and dividends. These are covered under the definition of revenue recognition. Now, the word enterprise itself has a substantial importance in the entire definition. So to understand the importance of word enterprise included in the definition of revenue, we will take an example. Delta Limited is a mobile manufacturing company. It has multiple divisions, including Division B, which is a parts manufacturing division, a component manufacturing division. And there is a Division A, which is part assembly division. So Division A has to purchase parts from Division P. The Division P sold parts worth rupees 3,212 crore to Division A in financial year 2025. So in this example, if we see for Division P, the amount of rupees 3,212 crore is a gross inflow arising in the course of ordinary activities. But will that be a revenue for Delta Limited as per accounting standard 9? Because in this scenario, if we see, Delta Limited can be termed as an enterprise, but division A and division P, these two are the divisions of an enterprise. These are not enterprise itself. So even if the amount of 3,212 crore is gross inflow for division P arising in the course of ordinary activities, will that be a revenue for Delta Limited as per accounting standard 9? So see, an interdivisional transfer within the same company does not meet the criteria, because from the perspective of a business as a single legal entity, no external sale has occurred because of three reasons. First, no transfer of legal different segments of the same enterprise. Legal ownership does not change hands, which is a requirement for a true sale. Second, no transfer of risk and rewards. The parent company as a whole, Delta Enterprise, retains the risks and reward of ownership. The movement of goods between interdivisions does not change the entity's overall exposure to the risk. And third, there are no revenue inflow from a third party. The transaction does not result in a gross inflow of cash or other consideration from a third party, which is the definition of revenue under AS9. The sale is purely internal book entry transaction. Therefore, for external reporting purposes, the transaction is treated as a simple transfer of inventory from one segment to another. Any internal profit is deferred until the goods are eventually sold to an external customer. As per the announcement titled Treatment of Interdivisional Transfer, published in the Chartered Accountant May 2005 journal, the recognition of internal divisional transfers as sales is an inappropriate accounting treatment and is inconsistent with accounting standard 9. While interdivisional transfers can be recorded internally for cost and performance tracking, sometimes at a transfer price that includes a notional profit, this internal profit must be eliminated when preparing the enterprise financial statements. If it were not eliminated, it would inflate the company's revenue and profit figures, providing a misleading picture of its performance to external stakeholders. So, continue with the definition of revenue. We have understood what is a revenue. Let's understand what is not a revenue. Because for meeting the criteria of being a revenue, the condition was also there of being it in ordinary course of business. So let's take an example from which we will have the clarity what is an ordinary course of business and what is a revenue transaction which is not in the ordinary course of business. CPL Limited is a pharmaceutical company. It has been conducting research on a new medicine. The research is about increasing the immunity levels of consumers of medicine without any side effects. The company has incurred rupees 58 crore during the year. During financial year 24-25, it decides to sell the result of its research to its competitor pharmaceutical company. It sells 2 years research outcome to DRD Limited for rupees 63 crore. Is it revenue as per accounting standard 9? So, to analyze this as an auditor or as an auditee, a chartered accountant should first assess the nature of income. He should be able to identify whether the income is in ordinary course of business or not. If it's not in ordinary course of business, then not revenue as per accounting standard 9. But if it's in ordinary course of business, then other condition of recognition will be tested, which we will see in the later slides. So for CPL Limited, it is not in ordinary course of business to sell the research papers. Therefore, it is not appropriate to recognize rupees 63 crore as a revenue from operations. Instead, rupees 5 crore should be recognized as other income in profit and loss statement. Now, measurement principles. Accounting standard 9 not only talks about measurement of revenue, but not at a detailed level, but it's in a sprint. Revenue is measured by the charges made to customers or clients for goods supplied to them, services rendered to them, and charges and rewards arising from the use of resources by them. The amount of revenue arising on a transaction is usually determined by agreement between the parties involved in the transaction. So, Accounting Standard 9 in its spirit talks about measurement, but at detailed level it talks about when a revenue should be recognized. In an agency relationship, the revenue is the amount of commission, not the gross inflow of cash receivable or consideration. When an entity sells goods or provides services on behalf of another party, it acts as an agent, not a principal. The revenue for the agent is only the commission or fee earned, not the gross amount collected. So let's understand what is the agency principal relationship. For the measurement of revenue of principal or agent, we need to determine whether the entity is acting as a principal or agent. An entity will be treated as acting as principal when it holds ownership, it bears all significant risk and rewards, and it has control over pricing and policies. When an entity is acting as a principal, it can recognize gross revenue. But if an entity which is acting as agent, how we will know that it is acting as an agent? It does not hold ownership, it does not bear any risk or reward, or it has limited or no control over pricing. In that scenario, being an agent, the revenue which will be recognized will be only the commission income or service fee. Let's take an example. There are two examples. First, Zomato facilitates food delivery from local restaurants during the year. Zomato made collection of rupees 300 lakh in the form of food price, which is 200 lakh, delivery charges, which is 60 lakh, and GST, which is 40 lakhs. In the restaurants, Zomato are two parties in the entire transaction. If we see from the perspective of Zomato, Zomato does not hold ownership of the food. The ownership is with restaurant. Zomato does not bear the risk or reward associated with the food. If it gets perished, if it is bad in taste, it is not the responsibility of Zomato. That risk is associated with the restaurant. And Zomato cannot control the pricing of food. It is the restaurant which can determine or control the pricing of food. So in that scenario, Zomato is not acting as principal, it is acting as an agent. It can only recognize its commission fee or service fee. Restaurant is the principal in that case, and for the food, it will recognize rupees 200 lakh as revenue, and Zomato will recognize 60 lakh as revenue. As far as GST is concerned, it is liability to government. It is not part of revenue for either of them. One more example. Let's take an example where Make My Trip, which is an aggregator, online aggregator, it buys airline tickets in bulk and will bear the loss for tickets unsold. Make My Trip bought tickets. It has already bought tickets for airline in bulk, and even if those tickets are sold or not sold, entire risk, entire loss, potential loss is with Make My Trip. In that scenario, we can conclude that Make My Trip holds the ownership of all the tickets. Make My Trip also bear the risk as well as reward associated with those tickets, and Make My Trip can control pricing of those tickets as well. In that scenario, Make My Trip can recognize full ticket sales as its revenue. So these two examples should be able to clarify the difference between an agent or a principal. Now, the timing of recognition of revenue in case of sale of goods, this is the most important part of the entire accounting standard. In case of sale of goods, the revenue should be recognized when all these below three conditions must get fulfilled. Even if any one of the condition is not meeting, then revenue recognition should be postponed. The conditions are: first, no significant uncertainty exists regarding the amount of the consideration that will be derived from the sale of goods. It talks about measurability. For example, Chemical Limited entered into a contract to sell 10,000 tons of specialized chemicals. The contract was entered on 15th March 2025, just before the end of financial year. The contract states that price per ton will be based on global market index price for that chemical on the day of delivery. The delivery is through shipment, so it will take time, and it will be delivered in, for example, July 2025. So in the entire scenario, even though inventory of the quantum of the inventory is fixed, which will be sold, but the amount of the inventory is not fixed as of today. It will be decided as per the global market prices of those chemical on the day of delivery, which will be a quarter later. In that scenario, because the measurability of the revenue cannot be determined, it is uncertain, revenue recognition should be deferred to the point when the revenue can be reliably measured. Another example we can take: a company sells some equipment and receives 10,000 equity shares of another company in exchange, where shares are publicly traded. Then revenue can be recognized in that case as fair value of shares can be reliably measured. Second condition is, it is not unreasonable to expect ultimate collection. This is very important condition. If at the time of transaction there is some sort of uncertainty regarding the ultimate collection of the entire consideration, then revenue recognition should be postponed. Revenue should be recognized if and only if there is reasonable expectation that collection will be realized in near future, but certainty should be in the present time. If there is uncertainty regarding the ultimate collection, then revenue recognition should be postponed. And third and very important condition, either seller has transferred property in goods, that is legal ownership, to the buyer for a consideration, or seller has transferred significant risks and rewards of ownership to the buyer, as well as seller retains no effective control or managerial involvement of the goods transferred to a degree usually associated with ownership. See, either seller should have transferred the legal ownership of the goods, और अगर लीगल ओनरशिप नहीं ट्रांसफर होता है बट द सेलर हैज ट्रांसफर्ड सिग्निफिकेंट रिस्क. बाय रिस्क इट मींस the damage of the product, the loss of the product, theft, obsolescence, or cost of possession. These are the associated risks. Those should be transferred to the buyer, and the rewards associated with those, as well as use, resale, or profit from appreciation, these should also have been transferred to the buyer. Then it can be said that, say, a revenue can be recognized if one more condition also fulfilled with that, which is seller retains no effective control or managerial involvement of goods transferred to a degree usually associated with the ownership. Let's break down what retaining effective control to a degree usually associated with ownership implies. If the seller is still able to use the asset for their own benefit or purpose without restriction, then the seller is retaining the control, not the buyer. If the seller can dictate how the buyer uses the asset, where it goes, on when it can be used, then again we can say that seller is retaining the control with it, not the buyer. If the seller can unilaterally demand the return of asset without significant penalty or justification, then again seller has not transferred the effective control to the buyer. If the seller remains significantly exposed to the fluctuation in the market value of the asset or stands to benefit from its future sale by the buyer, it suggests that haven't fully relinquished the control. If the seller has ongoing substantial obligation to maintain, service, or modify the asset that go beyond a standard warranty or minor service agreement, it could indicate that seller is still retaining the control and has not transferred same to the buyer. One very significant thing is that there are three conditions. First is measurability हो जानी चाहिए. Second, ultimate collection we can expect कि realize हो जाएगा. The third condition के अंदर दो पार्ट है, या तो लीगल ओनरशिप ट्रांसफर हो जानी चाहिए या फिर सिग्निफिकेंट रिस्क, रिवॉर्ड एंड कंट्रोल ट्रांसफर हो जाना चाहिए. There are few conditions जहां पे लीगल ओनरशिप ट्रांसफर होने के बाद भी सिग्निफिकेंट रिस्क एंड रिवॉर्ड ट्रांसफर नहीं होते. In those specific scenarios, revenue recognition should be postponed. See, generally legal ownership और उसके साथ जो भी associated significant risk and reward and control होते हैं वो ट्रांसफर हो जाते हैं. ये सारी इवेंट एक टाइम पर कोइंसाइड करती है. बट देयर माइट बी ट्रांजेक्शन जहां पर ऑनरशिप ट्रांसफर कर दी गई है बट सिग्निफिकेंट रिस्क रिवॉर्ड एंड कंट्रोल ट्रांसफर नहीं किया गया है. इन दो सिनेरियोज हमको सिग्निफिकेंट रिस्क रिवॉर्ड एंड कंट्रोल के ट्रांसफर को प्रायोरिटी देनी चाहिए ओवर लीगल ओनरशिप. एंड डिस्पाइट ऑफ द फैक्ट लीगल ओनरशिप ट्रांसफर कर दी गई है एंड रिस्क रिवॉर्ड एंड कंट्रोल ट्रांसफर नहीं किया गया है, रेवेन्यू रिकॉग्निशन शुड बी डेफर्ड. फॉर एग्जांपल, a company sells a machine to a customer. Machine needs to be delivered and installed. There are two parts. Machine needs to be delivered and installed. The contract states that the legal ownership passes upon the delivery, but the seller will be still responsible for installing the machine and getting it operational. So machine is delivered, payment is received, legal ownership is passed. In that scenario, if we see, if machine is damaged during the installation, who will bear the risk? As per the contract, the seller will still bear the risk. So in this example, the legal ownership was transferred as soon as machine was delivered. But till the installation, the risk is still with the seller. The revenue recognition should be deferred till the time of installation. Revenue is recognized only after the installation is successfully completed, as that is when seller has fully transferred the significant risk and reward in this example. In case of sale of services, when should we recognize revenue? Before that, we will understand what are the type of services where proportionate completion method will apply and what are the type of services where completed services contract method will be applicable. First, the type of services where proportionate completion method will be applicable. The services which are performed through multiple acts over a period. These services are continuous or recurring service contract. Stage of completion can be reasonably determined at the end of each accounting period. For example, annual maintenance contracts, consultancy, legal retainers. These are some kind of services where the performance are given, the services are rendered through continuous period and it is performed through multiple acts over a period of time. But there are some services which consist of a single or final act and service yet to be performed are very significant. In this scenario where services are in a way that it can be rendered in a single act of service, or even if there are multiple acts, then remaining act is so much significant, then it will also be covered under services where complete service contract method will be applicable. When the sole or final act takes place, the service becomes chargeable. For example, installation of machinery. It's a one-time act, one-time repairs, setup services. In those scenarios, if we see the provision of service is a single act, but in earlier example, for example, annual maintenance contract, it goes over a period of time. Now the conditions which should be fulfilled, all the conditions which should be fulfilled for recognition in case of revenue from sale of service. First, no significant uncertainty exists regarding the amount of consideration, same as earlier. Second, it is not unreasonable to expect ultimate collection. And third, in case of proportionate completion method, revenue is recognized proportionately with the degree or percentage of completion, and where number of acts over a period of time cannot be determined, then on the straight line method. For example, there is a software company which signs a rupees 1,20,000 contract to develop a complex multi-modular software for a client over 1 year. And the total estimated cost of from the point of view of software company is rupees 80,000. The revenue which the company is expecting is 1,20,000 and the cost which it has estimated is 80,000. Now after the year end, it is concluded that the cost incurred so far is 60,000. So if we compare that, the total estimated cost was 80,000 and the cost incurred till year ending was 60,000, it can be concluded that 75% of the work has been done. In that scenario, the company should recognize the revenue of rupees 90,000, which got computed from 1,20,000 overall revenue got multiplied by 75%, the proportionate amount of work done. But even if in the case of proportionate completion method, there might be a scenario where we cannot determine the degree of completion or percentage of completion. For example, there is a annual gym membership. A gym sells a 1 year membership for rupees 3,000. Now in that scenario, the customers will come, use the facilities available in the gym. The services provided is the use of gym facilities, access to variety of fitness classes throughout the year. In that scenario, if we see the degree of completion or percentage of completion cannot be determined because of the nature of transaction. So in these cases, the services are it is assumed that services are performed evenly for the year. Then revenue can be recognized evenly over the 12 months period, and monthly recognition can be 6,000 multiplied by 12, rupees 500 per month. In that way, there is no need to go in the detail of degree of completion, percentage of completion. If those data cannot be measured, then we can go on a straight line method. So again, in case of proportionate completion method, revenue is recognized proportionately with the degree or percentage of completion, and where number of act over a period of time cannot be determined, like in example of annual gym membership case, then on straight line method. And in case of completed service method contract, revenue is recognized only when the service is completed or substantially completed. Now, our third case and the last case, the timing of recognition of revenue in case of revenue from use of enterprises, resources yielding interest, royalties, and dividends. In this scenario, two basic conditions again need to be fulfilled. First, no significant uncertainty exists regarding the measurability of the amount of consideration. And second, it is not unreasonable to expect ultimate collection. Apart from these two conditions, in case of interest, the revenue will be recognized on a time proportion basis, considering amount outstanding and applicable rate. In case of royalties, revenue is recognized on accrual basis as per terms of agreement. And in case of dividend, the revenue is recognized when the right to receive payment is established. Let's take an example. ABC Enterprises holds mutual funds units where the dividends on units were rupees 10 lakhs. Dividends were proposed on 10th March 2024 and dividend was declared on 15th May 2024. So ABC Enterprises recognized dividend on accrual basis in financial year ended 31st March 2024. So was the act of accounting of ABC Enterprises correct in its substance? Well, if we analyze, dividend income is recognized only when the right to receive payment is established. Right to receive dividend is 15th May 2024, not on accrual before that. So in that scenario, the revenue should be recognized in financial year 25-26 and not in financial year 24-25. Now next topic, effect on uncertainties on revenue recognition. Even if performance conditions are met, revenue is recognized only when ultimate collection is reasonably assured and amount is measurable. But what if on a certain point of time at the initial level, there was a certainty of collection as well as amount was also measurable, but at a later time, the uncertainty arose in respect of collection. Subsequent derecognition or subsequent reversal, what will be the case? Situation number one, uncertainty of collection at the time of sale or service itself. In that scenario, defer recognition to the extent of uncertainty. Record revenue later when collection becomes reasonably certain. Second, consideration not determinable means not measurable within reasonable limits. Postpone recognition until amount becomes measurable with reliability. And third scenario, which is about subsequent uncertainty. Uncertainty arises after revenue is recognized. In that scenario, do not adjust revenue. Instead, create a separate provision, example for doubtful debt or price disputes, etc. These are some disclosure requirements which are put by accounting standard. First, accounting policies. Disclose policies followed for revenue recognition as per accounting standard 1. Second, if recognition of revenue is postponed due to uncertainties, the enterprise must clearly state the circumstances and amount involved. Third, mention basis or method used to measure revenue, example completion, percentage completion or accrual basis, etc. And last, disclose key estimates or assumptions that affect timing or amount of revenue recognition. These disclosure requirements are not only from accounting standard 9, these are taken from accounting standard 1, accounting standard 5 as well, because these are mandatory disclosure requirements. And the importance of these disclosure requirement from accounting standards are more than disclosure requirement of schedule 3, because schedule 3 is the part or schedule to the Companies Act, but these accounting standards are itself an act through Companies Act 2013. So these disclosure requirements are as much important, in fact I can say more important than the schedule 3 disclosure requirement. So at the time of audit, even if you are an auditor or you are an auditee, you should adhere to these disclosure requirement, whether these are properly and comprehensively presented in our financial statements or not. Now there are some illustrative case studies. These are, I will not say these are special cases, but these are some commercial situations where how the accounting standard 9 will be applied is talked in depth. While going through, we will have very much clarity about all understood in last 30 minutes. Now the situation 1, delivery is delayed at buyer's request and buyers take title and accepts billing. In this scenario, the delivery was delayed at the buyer's request. It means the significant risk and reward was transferred to the buyer. So revenue should be recognized even if physical delivery has not been completed, so long as there is very expectation that delivery will be made. However, the item must be on hand, identified and ready for delivery to the buyer at the time the sale is recognized, rather than there being simply an intention to acquire, manufacture the goods in time for delivery. If due to the delay of delivery, the company decided that we will manufacture the goods later, or the company decided that we will purchase the goods later for trading purpose, then revenue should not be recognized because goods itself is not ready for delivery. Even though the buyer has requested the delay delivery, but the goods are not ready for delivery, revenue recognition should be postponed in those cases. Second example, delivered subject to conditions of installation or inspection. The delivery was done but subject to the condition that it will be installed or inspected by the seller, then only revenue should be recognized. Revenue should normally not be recognized until the customer accepts delivery and installation and inspection are complete. But in some cases, however, installation process may be so simple in nature that it may be appropriate to recognize the sale, notwithstanding that installation is not yet completed. Example, installation of a smart TV normally only requires unpacking and wall stand installation. In that case, because of substance over form, we can say the revenue can be recognized before delivery, even if delivered subject to the condition of installation, because installation process was very much simple. Delivered subject to approval, revenue should not be recognized until the goods have been formally accepted by the buyer, or the buyer has done an act adopting the transaction, or the time period for rejection has elapsed, or where no time has been fixed, a reasonable time has elapsed. these are the situations where goods are sold to customer with a privilege that they can return the goods after 10 days or after 2 weeks or after 3 weeks if they do not like the product. So until and unless the time of the even approval comes, then recognize the revenue. Approval does not come from the customer, but the time period given to the customer has elapsed. In that scenario, recognize the revenue once the time period has elapsed, not before that. Next, delivered subject to condition of guaranteed sales. That is, delivery is made giving the buyer an unlimited right of return. Recognition of revenue in such circumstances will depend on the substance of the agreement. If the case of retail sales offering a guarantee of money back if not completely satisfied, which is the nature of guarantee, it may be appropriate to recognize the sale, but to make a suitable provision for returns based on previous experience. In other cases, the substance of the agreement may amount to a sale on consignment, in which case it should be treated as an indicated in next situation. Delivered under consignment sales, that is, delivery is made whereby the recipient undertakes to sell the goods on behalf of consignor, which is a principal agent relationship. In that scenario, revenue should not be recognized until the goods are sold to a third party. The revenue by principal will be recognized when the goods will be sold by the agent. Next, sales with the condition of cash on delivery. The condition is that we will pay the cash when it will be delivered to us. In that an arrangement, revenue should not be recognized until cash is received by the seller or his agent. Next situation, sales where the purchaser makes a series of installment payment to the seller and the seller delivers the goods only when the final payment is received. In those scenarios, revenue from such sales should not be recognized until goods are delivered. However, when experience indicates that most such sales have been consummated, revenue may be recognized when a significant deposit is received. Next, special order and shipment, that is where payment or partial payment is received for goods not presently held in stock. Example, stock is still to be manufactured or is to be delivered directly to the customer from a third party. Where contract has been done, payment has been received, but when the goods are not in the existence right now, significant risk and reward is still with the seller, which is the crucial condition for recognizing revenue. So revenue from such sales should not be recognized until goods are manufactured, identified, and ready for delivery to the buyer by the third party. Another situation, sale and repurchase agreements. That is where seller concurrently agrees to repurchase the same goods at later date. In this example, such transactions that are in substance of a financing agreement, the resulting cash inflow is not a revenue is defined in AS9 and it should not be recognized as a revenue because this is a financial arrangement. The revenue will be in the nature of finance income, interest income. Next, sales to intermediate parties, there where goods are sold to. Earlier we discussed the example where goods were given to agent for further sale. In this example, goods are sold to distributor, dealer, or other for resale. Revenue from such sales can generally be recognized if significant risk of ownership have passed. However, in some situation, buyer may be in substance an agent, and in such case, the sale should be treated as a consignment sale. Next situation, subscription for publication. Example, there is a publishing house which sells an annual subscription to monthly newsletter. Now, revenue received or billed should be deferred and recognized either on a straight line basis over time or where item delivered vary in value from period to period. Revenue should be based on the sales value of the item delivered in relation to the total sales value of all items covered by the subscription. See, अगर पब्लिशिंग हाउस ने एनुअल सब्सक्रिप्शन ले रखा है मंथली न्यूज़लेटर का एंड मंथली जितनी भी न्यूज़लेटर आती है, फॉर एग्जांपल ₹500 पर मंथ जर्नल है. मंथली न्यूज़लेटर को अगर मैं पूरा एनुअली रेसिप्रोकेट करूं तो इट कम्स टू 6,000. In that case, revenue should be recognized on straight line method on monthly basis. But if publishing house sells an annual subscription of monthly newsletter in a way that for 11 month regular magazine will be provided and for 1 month special edition will be provided. The regular magazines are of rupees 400 and the special edition is of rupees 1600. In that case, we will proportionate our revenue in the amount proportionate to the month in which special edition is provided. If special edition is provided in the month of March, then for the month of April to February, revenue will be 4,400 rupees per month. 400 multiplied by 11, 4,400, sorry. And for last month, revenue will be recognized for rupees 1,600, which is for special edition. So we need to see the value of product which is being delivered after the subscription of publication. Then next, installment sales. When the consideration is receivable in installment, revenue attributable to the sales price exclusive of interest should be recognized at the date of sale. The interest element should be recognized as revenue proportionately to the unpaid balance due to the seller. Then trade discount and volume rebates. Well, trade discount and volume rebates received are not encompassed within the definition of revenue since they represent a reduction of cost. Trade discounts and volume rebates given should be deducted in determining revenue. And if there is any cash discount, then it should not be deducted from the revenue. Rather, it should be booked as finance cost in profit and loss account. Installation fees. In case where installation fees are other than incidental to the sale of product, they should be recognized as revenue only when the equipment is installed and accepted by the customer. Advertising services. Revenue should be recognized when the service is completed. For example, there is an advertising agency which is charging rupees 1 crore for placing an advertisement on television. And the breakup of rupees 1 crore is that for the production of advertisement, for creating and producing the advertisement, it is charging rupees 30 lakhs. And for placing those advertisement on the television, it is charging rupees 70 lakhs. So in aggregate, 1 crore is the revenue. So when it should get recognized? When the advertisement is produced, created, and it is approved by the customer, then they can recognize rupees 30 lakh as revenue because their activity of production of advertisement is completed. And when the produced advertisement is placed on television for display, then only it can recognize rupees 70 lakh as revenue. Revenue should be recognized when the service is completed. For advertising agencies, media commission will normally be recognized when the related advertisement or commercial appears before the public and the necessary intimation is received by the agency, as opposed to production commission, which will be recognized when the project is completed. Next, insurance agency. Insurance agency commissions should be recognized on the effective commencement or renewal dates of the related policies. Next, commission charged for arranging or granting loan or other facilities, it should be recognized when a binding obligation has been entered into. Commitment facility or loan management fees which relates to continuing obligation or services, then it should normally be recognized over the life of the loan or facility having regard to the amount of obligation outstanding, the nature of service provided, and the timing of cost relating thereto. In the first example, the example appearing in the first row, it was an example of completed service method, and the example appearing in the second row, this is the example of continuous service method. So in the completed services method, when the service gets complete, then revenue should be recognized. In the second example, it was since the continuous service method, so the proportionate method will be applied and it should be recognized over the life of the loan or facility having regard to the amount of obligation outstanding. Admission fees. Well, revenue from artistic performances, banquets, and other special events should be recognized when the event takes place because it is a single act of service When a subscription to a number of events is sold, the fee should be allocated to each event on a systematic and rational basis. Next, tuition fees. Tuition fees is an example of continuous service, so revenue should be recognized over the period of instruction. Membership fees. Let's take an example. There is a elite social club. The entrance fees of that social club is 10 lakh, which is the permanent non-refundable fees. These fees grants them the status of permanent membership fees. All other club services, example dining, event, facilities are paid separately on transaction to transaction basis. So rupees 10 lakh entrance fees cannot be recognized as revenue. Instead, it is capitalized by adding it to the club's capital funds because it is seen as contribution by the members for members' permanent ownership rights. So entrance fees received is generally capitalized. If the membership fees permits only membership and all other service or product are paid for separately, or if there is a separate annual subscription, the fee should be recognized when received as the single act of service has been completed. But if the membership fees entitles the members to services or publications to be provided during the year, it should be recognized on a systematic and rational basis having regard to the timing and nature of all service provided. Next, interest, royalties and dividends from foreign countries require exchange permission. These are those interest, royalty, dividend income which is originating from the foreign country and it requires exchange permission to get received. So if uncertainty in remittance is anticipated, revenue recognition may need to be postponed till the time when certainty of its collection establishes. So while studying the entire accounting standard, if we need to understand when we should recognize revenue, then there is different case of goods and different case of services. Whether it's goods or services, the two fundamental conditions which are revenue should be reliably measured and revenue should be collected in future, but the certainty of its collection should be in the present moment itself. Apart from that, if in case of goods, the significant risk and reward and control is transferred, then only revenue can be recognized. If the substance and the legal form of the transaction is different. Legal form means the ownership has been transferred, but substance of the transaction, the economic reality of the transaction is that significant risk and reward is not transferred. Then in that scenario, revenue cannot be recognized. And in case of services, it need to be identified whether service is a single act of supply or it is a continuous service which is spread over a period of time. If it's a continuous act of service, then it should be recognized in the time proportion basis or percentage completion basis or straight line basis if any of the method is not available for calculation. And if it's a single act of service, the revenue should be recognized when once the service has been completed, it has been provided. So the principle of the entire accounting standard, the heart of the accounting standard is substance over form, where the legal document, the form of the transaction will always be overridden by the substance, the economic reality of the transaction. For example, there is a contract of extraction of mineral ores, and in that contract there is a government guarantee because government is buying those minerals. There is a market existing for those mineral ores and there is negligible risk of failure. So in those scenario, revenue can be recognized on the extraction itself, even though at the time of extraction ownership legal form is not transferred, but the substance of the transaction, the economic reality of the transaction is that once the mineral ores are extracted, the government will buy that. There is a market, an existing market for that. There is negligible risk of failure to sell those, and the collection can be 100% will become as the government guarantee is considered here. So in those scenario, even if the ores are extracted, the minerals are extracted, the revenue can be recognized at those stage itself. At certain stages in specific industries, such as when agricultural crops have been harvested or mineral ores have been extracted, performance may be substantially complete prior to the execution of the transaction generating revenue. In such cases, when sale is assured under a forward contract or a government guarantee, or where market exists and there is a negligible risk of failure to sell, the goods involved are often valued at net realizable value. Such amounts, while not revenue is defined in standard, are sometimes recognized in the statement of profit and loss and appropriately described because of substance over form. So that's all from me. Thank you so much.
Thank you, sir. Hello. Thank you, Hitesh,
Yes, sir.
for such a
Thank you.
informative and thought-provoking talks. I think we don't have any question right now. So, vote of thanks. Shall we enter? As we come to the end
can be
of this session,
given by you. That's it.
as we come to the end of the today's session, I sincerely thank our chairman, our speaker, and each one of you of your valuable time and active participation. We hope this webinar added value and gave you new sights. Stay connected with us for the future sessions. Thank you once again. Have a great day ahead. Thank you.
CP committee would like to thank both our faculties and Ankit Parak sir for a wonderful session. Thank you so much.
Thank you.
Ji Bhargav ji, we can end it now.